You've probably heard or read about the increase to the capital gains inclusion rate presented in the 2024 federal budget that will become effective June 25th of this year. So the rate will go from 50% to 66.7%, which amounts to between an 8 to 9% increase in taxes that will be paid on a capital gain. Individuals will get a $250,000 in gains per year at the lower rate, just to make life a little bit more complicated in figuring out what the right answer is. So to put this in context, on a $1 million gain, that's an additional $90,000 in taxes. This change continues to be one of the most talked about topics amongst taxpayers and professionals. Cottages, of course, have been the current hot topic that you've probably heard about. Why? Well, this might present a planning opportunity or challenges because there's more tax, of course. There is a short window available to take action and next steps. The gains, if we choose to trigger them, have to be done before June 25th. So if you think you have a large accrued gain, might be real estate or investments, you could be asking yourself if it makes sense to sell now or wait. To do something or not, that is really the question. The answer to this might vary depending on your situation. There are several factors that need to be considered before June 25th, of course. Then these could have some unintended consequences. So for example, the things you have to look at: what are the tax savings that you could realize if you triggered the gain early? What is the time value of the money? You might be paying less in taxes, but you will be paying it sooner, and you might not have the cash to pay those taxes. So what about the other tax considerations that need to be taken into account? Some examples of these: would the transaction trigger alternative minimum tax? Would the transaction walk you into the residential property flipping rules? Do you have use of the lifetime capital gains exemption, and what will this do to the factors? And what about the new general anti-avoidance rules? So there is a lot to consider in this very short window. So what do you need to do? Talk to your advisor today and discuss your options. And this includes those who already have an estate plan in place, because this could change it. So for more details, read our tax alert on grantthornton.ca.